Hello and welcome back to the FT Newsroom. In what may be the biggest bailout ever, the US government has taken control of the mortgage giants Fannie Mae and Freddie Mac, taking on about $5 trillion worth of liabilities and promising to inject up to $200 billion to shore up the companies. With me to talk about it today is Martin Wolf, our chief economics commentator. Martin, can you just explain the magnitude of this move?
Well, the liabilities of these institutions are close to 40% of US GDP. So if these liabilities appear on the US government's balance sheet, suddenly the United States will look like Italy. Of course, it hasn't changed anything fundamental. The truth is, these were always liabilities of the US government. It's now recognized the reality and has had to assume these risks because of the housing market situation and because the truth is people were increasingly unwilling to lend to these two institutions. And if that became a serious problem, there could have been a real meltdown for the US dollar and the whole of the US credit markets. They were simply too important and too big to be allowed to fail.
There's been a lot of talk about the privatisation of profit and the socialisation of risk or loss. With this move, are we actually seeing a privatisation of the loss?
Well, actually, it's not that new. Shareholders have been wiped out. They were wiped out in Northern Rock, they were effectively wiped out in Bear Stearns, and it seems that shareholders are going to be pretty well wiped out this time unless there's an extraordinary recovery. So that isn't really news. We're used to that. Unfortunately, from my perspective, though perhaps unavoidably, creditors have actually been rescued as far as I can see. So essentially, because the risk capital, the equity capital was too small, the government has assumed the cushioning function that equity would normally perform. The difficulty with that for the future is that it, of course, will reduce the interest rates that such institutions can borrow at, and that will make it even easier to restart such lending at some point in the future. But in the end, it's clear that most of the creditors are going to be bailed out, and so the private sector is being saved by the taxpayer.
So what's the moral hazard implication here?
Well, the implication is that if something is not done very seriously about regulation in future, financial institutions will attempt to, and will naturally attempt to operate with even less capital because they don't really need the capital, because the main role of the capital being to protect the bondholders, the creditors, because the government is going to provide that insurance. So why have equity at all? In fact, why operate a financial institution with equity in this sort of world where the government ultimately takes these risks? So the moral hazard dangers in this case are, I think, very, very large, and those are far for the future. They're going to have to think very, very carefully about the way they run the financial system in future.
And the plan is a little unclear beyond the end of next year, and Hank Paulson actually said, this decision gives policymakers a time out. What are beyond 2009, when they're looking at then reducing both companies by 10%, or reducing their holdings by 10% a year, what's the implication there? I mean, there's still a lot of unknowns, isn't there, in the long term?
There's a famous line that it's the provisional that lasts. And I would be very surprised if they found it easy to get out of this. Essentially, the government has now become, quite officially and openly, the principal guarantor of mortgage lending in the US economy. It's operating in the context of a falling housing market, and the market is continuing to fall with ever-rising bad debt. This is not a situation in which one can expect the private sector to suddenly leap forward and take the government's place, particularly when effectively the government is of course doing it on a subsidized terms, because the risk is actually being borne by the taxpayer. What private sector institution can compete with this? So it's highly probable that there will be no significant recovery of private lending to the US housing market for years and years and years, maybe 6, 7, 8, 9, 10 years. That's how long it took in Japan. And meanwhile, the government will in fact be doing most of the lending. So I wouldn't be in the least surprised if they found themselves running these huge entities as the principal lenders for housing in the US for a very, very, very long time. It's a deeply unsatisfactory situation, and it may well end up with very, very large losses for the taxpayer.
So you mentioned Japan. Is this increasing the signs that the US might be facing that kind of financial dilemma now?
Well, the underlying similarity is that there's a falling asset market, the housing market. Now, we have to remember that in Japan, property prices fell by about 70% or so from its peak, and we're not seeing anything like that so far in the US. But if that sort of fall in house prices and property prices were to occur in the US, yes, we would have some similar problems. The big benefit of what the US has done is that it's taken relatively early action to shore up the financial system. So they basically replaced government credit with private credit, and that's essentially what they're doing. The US has one big disadvantage vis-a-vis Japan, which is not sufficiently stressed, but was very important in this case. The US is a very large net debtor to the rest of the world. It depends on foreign creditors to sustain the credit of both the private and the public sectors. So while Japan was a very large creditor, if the United States were to lose the confidence of the rest of the world, and that was surely very important in making this decision just now, then it might be much more difficult to solve the problems of the financial sector than the Japanese found it to do. Ultimately, if you want to rescue a very badly damaged financial sector, you need a credibly solvent government. And the US government is not in quite as strong a position as the Japanese government was at the beginning of this crisis. So this could go on for a long time, and we could find many difficulties on the way.
Great, thanks very much, Martin. You can read quite a lot more news and analysis and comment about the bailout, plus news on what the markets are doing in response to the announcement on ft.com.